Okay, let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iNotices.com. So I'll be presenting the reviewing part of the Asian Session Live Market Analysis webinar, what I gave it on 6th of July. That is on Monday. And that particular webinar was not recorded due to technical reason. Anyhow, today's webinar, 9th July, is being recorded. And those who have attended will be able to recollect that what I explained on Monday, which has come true. And today we are going to review the market as far as the forecast is concerned. Then subsequently, we will fine-tune the forecast using the market reading technique, using the initial lows and the highs set around 3:30 GMT. And also, we will try to briefly touch upon the trading strategy, what we should adapt during this extreme market conditions. Now, first of all, if you recollect that the second quarter got over during June and the third quarter has started. So when they do this sort of changeover from that of the second quarter to third quarter, what they normally do is they just go in for accumulation of the positions. So the players just exit out of the holding positions, book profit, and show the maximum profit by end of June. And then the amorphous money, they have to enter into that other market again. So when they accumulate more positions, that can be used to book profit later on by the end of this particular quarter. So in this quarter, they have to accumulate the positions. The players are known to accumulate the positions by making the drop in the market. That's what's happening now. So they just dropped Euro GBP using various excuses, including the Greece crisis and also interpretations for various type of data release, etc. And that has created the bearish sentiment in the market. And the traders were thinking that they should do the sell and buy trade. But what the players have done, on 6th, they just firmed up and started making the slide. And also the 7th, they started making the slide Tuesday. And Wednesday, also they just made the drop and show all the new lower levels and then started gaining the levels from the European session. And still, they just created the feel in the market that the market, any bounce back, we should sell. But subsequently, today onwards, they are expected to gain the levels in the market and slowly they will try to book profit in the accumulated positions. So what we need to understand is they are going to start the trending time from now. And during this particular trending time, it will be an upward trending move in the case of Euro and GBP. And before that, they also made extreme moves in the case of the other crosses. Especially yesterday, they handled the yen crosses in a big way on the downside. So those of you following how to read the market would have understood that they made the extreme move of dropping GBP and also USD yen as a typical contrarian move, and nearly about 400 pips they just dropped in the case of GBP yen. So Euro yen and GBP yen, they dropped it in a big way yesterday and started gaining back now. So when they just created, everybody is talking about USD yen has become the safe haven. So you know that from time to time, the safe haven might be shifted from one cell to another cell. And this time it has been shifted to that of the yen cell. So then everybody thought that USD yen is going to drastically drop down, but they started gaining it. So we know very well the players create the market sentiments and act against it of the traders. Still, they are handling the yen crosses. You can see that they are making the contrarian moves in the case of Euro and GBP and also USD yen on the reversal part of it. So they just slowly gain the level. People might think that N crosses do not have the strength to go up, so they will try to take sell positions. And afterwards, they will make an upward squeeze in the market. So if you think that the sentiment created in a currency is going to be perennial, then we'll be duped. And the very next day, they just show the opposite sentiment, which the traders might find it difficult to digest. That's what happens every time. So they started talking about the Greece problem. So everybody thought that the euro might have a free fall. And after the referendum, after the negotiations, everything, they've been telling that euro could come down, but silently they gained the levels in the market. So that is what they are expected to do, create the market sentiment and act against that of the traders. They have been dedicatedly doing that, irrespective of the hype which are being created with regard to various data release and also the events, etc. So that we need to understand. We might think that the market is nothing but the reflection of the economic events, but it will appear like that. But the players are here to make only the money. They are least bothered about the rest of the countries. And they only just create the extreme moves in the market, especially during the start of the third quarter, and induce the fear to that of the traders to go in for a distress trade. And then subsequently, they accumulated all the positions in euro and GBP by showing new lows. And also in the case of Australian dollar, they showed extreme new lows. And then they started gaining it just like that, using some excuse, because they have always the capacity or mechanism to highlight the excuse. And it might be a minor excuse, but they can just exaggerate it or use the media to propagate it in a big way and then suddenly make the move, so that the traders will think that, okay, the market is nothing but the reflection of the economic status of the various countries. So they, from time to time, they will create that. Once the traders get convinced, okay, fundamentals are driving the market, then immediately they will say, no, it is not fundamental, it is technical which is driving the market. They will say that it is but conditions will suddenly drop the market. And people might think that support and resistance are the working conditions, or they will be able to really help us to determine when exactly the market is going to reverse. But they will simply breach all such supports and resistance, and then we will find that the people start talking about the level 1 resistance, level 2 resistance, level 3 resistance, and they breach all the resistance and go above as one-sided trending upward move. And people have to forcibly close their sell positions with a huge loss. So this is how the players make continuously money from the other market. And now you find that from today onwards, after that of the BOE interest rate announcement, they are expected to make the rise in the market. And small slides, they could do it in order to induce the long holders to liquidate the long out of fear, especially when they do the lower level consolidation with a frequent downward stop. And many people will also try to take the buy positions and start keeping stop at entry there. And the players will gain the levels to induce the short covering. But those who are holding the long positions will, out of greed, try to hold it to maximize the profit. Then what the players will try to do, just drop the market to create the fear. Then such traders holding the long positions at a lower level will try to close it with stop at entry or with 5-10 pips making position for a longer time, because the market sentiment they have created is bearish. So when the long holders liquidate the long positions like that out of fear, then the players are here to accumulate all the buy positions, start gaining the levels more and more. As a result, we'll find that everybody will become fool and all follow the Greece issues, etc. Suddenly see that the market has simply reversed it, discounting all the events and started talking about the events which are going to come forward, and then the traders will think, okay, we are cheated, we are just missed the bus, or whatever be the uh, impressions they get. They only try to change the sentiment and try to enter into the market. But in the process, what happens, they try to buy after the rise, then again they will be cheated. The players will try to drop and induce them to liquidate the long position and then gain. So players do not just like that allow the traders to do the bottom fishing at ease. So it is a difficult task. It is a capacity you need to have, the negotiation ability, and try to find how exactly you can capture the positions. So I have been telling many times that during such extreme moves, lower level consolidation with a downward stop and move, you have to wait for the stop ins. And especially when they make a quick downward stop and stop cutting the new low for more than 30 minutes, you try to take a buy position, you will be able to 100% see the profit in such positions, because they cannot continuously drop or continuously rise the market. As I explained, that they can only do such moves, similar moves for 2 days, not more than 2 days. They don't do hat trick. So after doing that drop for 2 days, they started reversing the market yesterday. And you find that what the levels, lows they are shown in all the numerator currencies were on Tuesday, and Wednesday they showed the lows in the case of the denominator currencies. So we will see they're expected to gain the levels for the rest of the 2 days. We will see the levels in which the currencies are expected to swing. Now, euro came down to that level of 1.09 and then started gaining it now. So they are holding near that of the high. They will breach the high and start go above. And today, after the ECB, just because they made about 200 pips drop in the case of GBP, to start with today after the BOE, and they will make one upward spike and then continue to gain the levels above that of the high they are set in this week. And so in the case of yen, they came down to 120.47, and then afterwards they just gained 100 pips already from there, and the net change is 69 pips. And you will be wondering, when euro and GBP are gaining the levels, how come USD and HO gain? But they will simply gain the levels telling different story about USD and so that is how they make the contrarian move. Still, they are doing the contrarian move. Can easily see that only if you look into the live market code page, you will be able to understand how they are making the moves. Otherwise, whatever the interpretation given in the market will appear true for you. And then you will be taking a different type of positions, and later on see that you have to forcibly close the position, because they only try to attack the herd of traders who follow the conventional methods. That is why even those who are giving the analysis with regard to the market, they say that they have modified the conventional analysis and try to give a different interpretations, etc. But ultimately, the players are here to know what the traders can do, because they don't have any other option other than the technicals and fundamentals. So in such a scenario, what the players do is they simply get the insider information, whether the traders are long or short. No technical analysis needed for them. They only want to know whether the traders are holding net long position or net loss short positions, accordingly make the whips or moves and just earn from such traders. So they made the extreme drop in the case of GBP. Nobody was in a position to buy at that time. Extreme move in the case of GBBN, nearly about 415 pips. They made the drop in the case of GBBN yesterday. Nobody was in a position to buy because all were holding long position, thinking that, okay, this is the bottom, we'll try to buy. And so in such a situation, what can help? Only the trading strategy. So when you are going for a bottom fishing, and think that it might be the bottom, then market might come down further in order to hit the stops, which are further lower level, because they are the inside information obtained by the players. So as long as the cluster of stops are there, they will try to hit the stops so that they'll be able to make huge profit. And especially in the case of the institutions, when they are holding the positions, if the position makes a loss of about 15% or more, and automatically such positions will be triggered off. And so they make such moves so that the institutional positions, even though they try to trade without a stop, can also get triggered. And as a result, you find the players make huge profit by such moves. And when the market is dropping, everybody will be just holding the hand on that cheek and thinking what is going to happen, how much of people would have lost the money and things like that. That is true with regard to all the traders. But with regard to the players, they made huge profit from that of the market so that they can become trillionaire to trillionaire, trillionaire to trillionaire, and world top positions are being obtained by them or retained by them. So you find invariably such extreme moves are being done in the market during start of the third quarter in order to mainly gain the levels. And they accumulate the positions by that. Drop and accumulate the positions by doing lower level consolidation with frequent downward stop and then start gaining the level. Now you can see that USDN, they just made the drop and gained. And also in the case of CHF, even though as USD CHF, they gained the level, they are not dropped it much. They came down to 0.94 and started gaining to 95 area. And slowly they will gain it to 97. That's what I was telling you even earlier in the month of May. And in the case of Canadian dollar, they also gained the levels, as I told you, that they'll do the consolidation at the higher level and try to gain levels and sell, gain levels and sell. They will build sell positions in the case of USD and Australian dollar. Also, they made the extreme downward move and accumulated the buy positions, started gaining the levels. So invariably, you find that they are just shown the extreme moves. They are fear creating move. The fear is created for the traders to go in for a distress trade. Then, with regard to the technical, the market trading technique, euro has not breached the low, but now it has breached the high. And they breached the high, made a small dip, and within 30 minutes, they just breached again the high. It shows the intentional upward move, and they are holding above that of the high. So once they hold above that of the initial high for more than 30 minutes, you can understand. And also they frequently cut the high every 30 minutes. It is an intentional move on the upside. Don't try to sell and try to buy on the drops. In the case of GBP, 53.57 is the low, 53.75 is the high. They breach the high and staying above the high. So they are expected to gain the levels after that of the BOE. Till such time, they will try to gain less in the case of GBP when compared to Euro. Afterwards, GBP is expected to claim more when compared to that of Euro. As a result, Euro GBP, they will just gain and drop the levels. And the case of Yen, so after that of 124, 23, 22, they came down to 21 and finally to 120.47. And that is the low, and high was 120.94. They just breached the high and staying above, and they are expected to continue to gain the levels. See how they are dropping about 200 pips in the case of USD yesterday and simply gaining back all the last level. So what fundamentals can do with this? Can fundamental change in a day? Then USD CHF 94.50 was the low. They just breached it and came down to 94.30. And 94.60 was the high. And that is intact. So they're just showing a brief downward stop. And in the case of USD CHF, they may come to 94 or briefly hit the stops below that of 0.94 and start gaining the levels. And in the case of Canadian dollar, 1.2721 was the initial low. they just breached and staying below that. And the high was 1.2748, which is intact. After making a higher level consolidation, they are expected to breach the low and come down. And then afterwards, that will be the USD weakening move to start with, and then start gaining the levels again. So they will be making the higher level swings in the case of USD CAD. Then Australian dollar, after accumulating the positions at the lower level around 0.73, giving the impression to that of the traders that it could go to 0.72 and reverse, but they thought that there is a strong support, but they did not go up to that, and they want the traders to sell here below that of 0.74 and absorb all the sold positions and then started gaining the levels. So automatically you find that they breached the high and staying above that of the high, initial high 74.52. And 74, 78, 80, 81 is the level, 85 is the high. They are expected to gain further levels. And they may simply say that because of the strong economic conditions or whatever it is, ultimately the players do their own moves, irrespective of the data release. The data release, they are using it as triggers, nothing but triggers, and they will use it according to their convenience. So even if there is a Greek decision which is against that of euro, still if they want to gain euro, they will gain euro. And so that is the way they try to operate the market. So you understand that if you think that these type of events are going to govern the market, then definitely you will continue to receive the surprises. And whenever you get that surprise, the mind become emotional, which is not able to understand why such surprise has happened in the market. And once your emotion is triggered, you go in for a distress trade. There are two ways of distress trade. And whatever the holding positions, if that is making huge loss, you will just cut that without using proper trading strategy. And if you are not holding any positions, then you tend to go in for a sell after the drop or buy after the rise. That way, all emotional trades end up with losses. So ultimately, use the common logic. Then watch the initial lows and the highs set for the day. Then sell near that of the high when the high has not been breached for more than 30 minutes. When they come close to that of the high, and they, even if they breach the high and stay above, watch for 30 minutes whether they are staying above that. If they are staying above that of the initial high for more than 30 minutes, that means they wanted to continue to gain the levels. Then in that case, small dip above that of the initial high, you try to take a buy position, you will be able to book profit. But still, our reading can go wrong. So keep the hedge order to limit the risk. And in the event if it is hedged, watch for 10 to 30 minutes, see whether the hedging is making profit or loss. And if the hedging is making loss, that means it was filled during a small stop end. And if the hedging is making profit, that means they are going against us. In the event if they are going against, watch whether the position, the hedge is making profit for more than 30 minutes, and then you simply close the buy position and maximize the profit on the sell position so that you'll be able to close with a net profit. So on a daily basis, you can do it using the hedging without using much of a complicated hedging strategy. So ultimately understand the players are manipulating the market. It is a man-made market in that ultimately our trading strategy alone will be able to make us sustain in the market and consistently earn money from that other market. So these are all the market timings. So watch the market timings. Early in the late sessions, they handle the majors, and the mid sessions, they handle the crosses. Keep that in mind, and then try to take positions accordingly. And whenever they are handling the mid sessions, the crosses, watch that what two pairs they are making the moves in order to make a big move in the case of cross. So yesterday you'd have noticed that they made the drop in the case of GBP, drop in the case of USDN, mainly a contrarian move in order to drop GBPN in a big way. Then afterwards, that means what? They drop the market and buy. They rise the market and book profit. So when they drop the market, once they stop cutting the new low for more than 30 minutes, by US session, they start cutting that new low for more than 30 minutes around 15 GMT, then if you would have taken a buy position in GBVN at that time, you would have seen 100 pips profit already. So that is how you have to be an opportunity trader. So don't immediately recollect, no, euro is not going to survive and Greece is going to continuously create problem. If you go on talk about Greece and things like that, you will miss the opportunity of making money from that market. Probably you might become a good political analyst. So I take this opportunity to thank FX Trade for the facilities provided and you people for coming here to listen to the webinar. And I'll try to answer to the questions which are asked to you. When is the best for position trade? Now, this drop time, you take the buy positions and you will be able to really see the maximum profit by end of the month and also next month. Then Srinivasan, what is your view on Euro USD long term? Will Euro go below? No, Euro is not expected to go below that of parity and it is expected to go up. See, there are occasions wherein they have shown such extreme moves in the respective currencies. And in 2008, they have shown the highest level in the case of Euro 1.60 and GBP 2.11. And 2009, they showed 1.09 and 1.34 in the case of GBP and reversed it. And in 2001, before that of 11th September, if those of you remember, Euro was trading below that of parity, around 0.78. At that time, I was giving the information that Euro is going to trade above parity and you will come across that US dollar is expected to undergo a big collapse. And that's what happened after September 11th, 2001, the calamity. So ultimately, the players make some extreme moves. We should be able to understand. It is nothing to do with that of the economic conditions. They only create the fear for a few days and capture the profit out of the holding positions of the traders. Okay, Lam has got a question. Please comment on impact of China meltdown. Sir, my humble request for the people is, in order to convince the traders to commit wrong positions, such highlights are continuously poured into that of the market from time to time. And you know that the Greece problem, okay, when you say it is Greece problem, it is pertaining to Euro. You know that Chinese market made the drop, Indian market made the drop, and also Tokyo market made the drop and US market made the drop. So you have to understand why all the markets have made the drop in stock market. It is nothing but the players have booked profit by end June and they are dropping the market to accumulate the buy positions at the lowest level. For that, they need some negative news. So if the negative news is from one island, they will simply say that it is a great danger for the entire economic conditions of the world. Now, that is how they just present it. And afterwards, you find that the traders have got a short memory. They will simply forget everything once they continue to change the sentiment in the market from time to time. So as long as the traders are concerned, they have got a very short memory. Once the market reversed and started creating the bullish field, all the analysts will talk in a bullish way. And the traders will also try to make some money by doing buy and sell trade once the market turned. But the players don't allow them to do the bottom fishing. And so in such a condition, you should be able to smartly take the lowest level buy and capture the profit. Everybody is interested in doing that, do the bottom fishing, but they do not know the technique, how exactly it has to be done. So for that, the patience is virtue. So if you patiently wait for such moves, okay, the second quarter is over, third quarter, they are going to make such extreme moves in the market to accumulate positions. So let us wait for that. If you wait, and okay, they are using this time the Greece problem. This is not the first year they are using the Greece problem. Even last year, before that, also they have been talking about the Greece problem. And then they just gained all the way 1.40 in the case of euro and simply said that the Greece problem is discounted. And again, they started talking about the Greece problem. So that is how they will try to give the interpretations. Ultimately, we have to focus on our trade, focus on our money-making process. The next slide. Okay. Okay. And is it good for joining a commission-based platform or a fixed spread? See, as far as the platforms are concerned, either the manipulation is happening in the platform level if they are market makers. Otherwise, it will happen in the bank level. So ultimately, the banks and the brokers can make money only from their clients. So that you need to understand. So they will try to manipulate or try to give some sort of disturbance to us. When it will affect us, if you overtrade, if you take only one position and try to book profit, the spread is immaterial for us. Whether they keep about 2 pips or 3 pips or 5 pips, as long as you use the hedging facility to limit the risk and maximize the profit using a trailing stop or a manually trailed stop, because some of the platforms, if you use automatic trailing stop, they simply capture it and close it. So you manually use the trailing stop in profit making position, you will be able to really maximize the profit. So you have to understand the market swing, watch it using the live market code page, and then you'll be able to see that any platform is fine. Even the market maker is fine to make money. But what happens with regard to the market makers? If they find that you are consistently earn money, when you come for the withdrawal of the money, then they try to create some problem and do not allow you to withdraw the money. That is one possibility. The other possibility is they can simply enter a wrong trade and reduce your free margin. In the history, they can simply enter the wrong trades and reduce the margin suddenly which you wanted to withdraw, and you have to go in for a fight with them. Unless and otherwise you have a screenshot of everyday history, it is very difficult to prove. So try to understand that invariably we need to limit the risk, and it is not the players who can really help us to do that, and they are here to exploit. So please understand that the players are here to exploit us, and so it is not only the question of players and the platform providers. Ultimately, we are responsible for our trades. So they only try to find the weak-minded people going for over trading in order to grab maximum profit from the other market. In the process, they lose maximum. So if you are contented and if you try to trade with one trade at a given time, and after booking profit only I will go in for the second trade, etc., then you will not find this sort of trouble. And especially you try to open the account with a platform having a lesser margin than that of the leverage. So there are platform, they offer 1:200, 1:400, 1:500,000, etc. They are all nothing but the trap. So if you go in for the trap of a higher margin, then probably you think that, okay, all the money is still with us. And once you take the position, because used margin for taking position is very low. That's what you will think. But invariably what happened, that will lead to that of over trading without your knowledge, because you will think that, okay, I got adequate usable margin, so let me average the position, average the position, average the position. Finally, see that all the loss making position will take away the free margin from that of the account, and you will be closer to that of the margin call. So avoid that. And whatever be the promises of the platform, there will be hidden agenda of the platform providers. Keep that in mind, because they are also into business and they want to make money. And see, if a person is capable of making huge profit from the market, then he will not be interested in providing a trading platform, because providing trading platform is that, okay, let others trade, let me continuously earn money. For that, they will use some money as an investment and try to exploit the traders, because they have got the gambling tendency. So that we need to understand. So in such a scenario, you'll find they are willing to give advice to all others. They will have all experts, and the experts will give calls, etc., but they do not know how to read the intentions of the players. That's what finally is going to be important for us. That is why I'm telling you, as small traders, don't be carried away by such whatever the promises they are giving it over the net, and try to find, because if you try to trade in a demo trading platform, you might come across such problems, and when you ask them, they will say in real platform it will not be. And if you just show interest to any platform provided, you will find the representative calling you 100 times to open that account. And once you open that account and call them back and say that I got an issue to be resolved, they will be least bothered. That is how they are short-minded, and they are not into that of making the money in a long term. And they wanted to have the quick-wittedness, open the platform, earn as quickly as possible, and then disappear. So I'll be again coming on Monday, the 13th of July, and give you the forecast for the next week. On 14th, I'll be presenting the Tracking the Forex Market Together webinar, part 1 by 8 GMT and part 2 by 13 GMT. Start of the European session, I'll take the positions before you using the live market code page as a tool, and then show you the results by 13 GMT. We can also follow and see how easily we can read the intentions of the player without diversions. So that is what, because the most important thing is the diversions in the mind of the distractions in the minds of the traders. Such distractions make the traders to lose money. That we need to understand. Thank you one and all. See you on Monday.